how does early retirement sounds like? Early retirement. Well, make sure you watch this video all the way to the end because I'm going to be revealing my secret hacks, things that I'm currently doing right now so that I can retire early before I reach the age of 40 years old. Let's get into it. What's up guys, this is JC and welcome to the Wealth Engineering channel. This is where I create content so that you can learn how to make, keep, and multiply money in the world of cryptocurrencies. Now we mostly talk about a lot of things related to wealth, but especially about cryptocurrencies. And in today's video, I'm going to be showing you my secret things that I'm doing right now, investments in cryptocurrencies that could potentially help me retire much earlier than I anticipated. Before we get to the strategy, there are two concepts that I'm going to be talking about so that you can understand exactly how I'm going to make money for my retirement. Have you ever heard Drip? What is Drip? Well, according to Investopedia, Drip, or also Dividend Reinvestment Plan, it's a program that allows investors to reinvest their cash dividends into additional shares or fractional shares of an underlying stock. All right, so this is very important because it's reinvesting the cash rewards that you get from holding the stocks, and then you reinvest that back into the stocks so that you can get more of it, right? You guys know about me. I love cash flow value investing. You make the money now and then you make the money over time with price appreciation. And investing in stocks, collecting dividends is just a great way of doing that. That's the first concept I want you guys to understand. In cryptos, you can also do the same thing whereas you don't get a dividend, instead you get an interest rate for the investment you make, right? You can lock your investments in cryptocurrencies and collect a dividend on a weekly basis, on a daily basis, even sometimes on a minute basis. But the actions of reinvesting back the dividend that you collected or the interest rate also creates something like a compound interest. Now, it was none other than Albert Einstein that was saying that, hey, compound interest is the 8 wonders of the world, all right? So why would he say that? So what about compound interest that is so magnificent that it is being compared to the Eiffel Tower or the Pyramid of Gizeh in Egypt? Because of the power of how fast it can multiply over time, right? If we go back on the definition of compound interest in Investopedia, it says that it is the interest calculated on the initial principal, which also includes all the accumulated interest from previous periods of a loan. Now, I wanted to read this from you from Investopedia. So we were looking at compound interest. It says that the rate at which compound interest accrues depends on the frequency of compounding. Very key words right here, frequency of compounding. And it gives you an example, such that the higher the number of compounding periods, the greater the compound interest. Thus, the amount of compound interest accrued on $100 compounded at 10% annually. So that means at the end of the year, after 265 days, you would get $10 on top of this $100 you had, will be lower than $100 compounded at 5% semi-annually, right? So basically, after 6 months, you would get $5, right? On top of 50, that's 55. You're compounding that for another 10%, then that gives you $5.5. So therefore, you have $10.5 by doing it semi-annually versus $10 by doing it annually. So the frequency of compounding definitely helps. Once you understand these two concepts, first, Drip, the fact that you reinvest the money back into stocks or assets or whatever you want, and then the frequency of compounding also increase the rate of return you can get. Now, all you have to do is to find an investment that does just that. Let me show you an example of what happens when you do a compounding every day, right? So I actually drew this graph right here, and this is a plot from one of my investments to project exactly what I could get in a year. But the blue line right here will show you a linear income, right? If you had a job and then you would get paid every 2 weeks, let's say at the beginning of the year, you have $0. At the end of the year, you have 70,000 because that's what your job is going to pay you prior to tax. Well, that's what you're going to get at the end of the job, right? 70. So it's a very linear way of income, but that's not the hack. If you really want to retire early, you really have to multiply that number exponentially. And that's the keyword right here, exponentially. And when you actually plot the graph of compounding interest every day, it actually results you into an exponential graph, and that looks like this. So it starts slow at the beginning and then it goes all the way up. All right. Now you've been wondering, why is there some numbers right here? You see $50, $55 a day, and then at the end you're kind of seeing like 100, 1,500 a day, $2,000 a day. What does that number means right here? This is exactly your projections that I'm making from one of my investments in cryptocurrency, especially in decentralized finance, that is mixing all the concepts that I've been talking to you right now. It's actually called Drip.Community. You can go on Drip.Community and set up a wallet right now and do exactly what I'm saying. It pays you 1%, but it doesn't do it annually. It doesn't do it semi-annually. It does that 1% per day. This is it right here. This is my account on the Drip network. You can see that, hey, I'm about to, you can see right here, I have about $5,000 locked in the investments. And it says it right here that it pays out a 1% daily for a return of 265%, right? So 1% per day times 265 days in a year. That's the potential of 265% return. But remember, you also compound that. So when you factor the compound effect, it's much more than that. All right. So here's an example. I have $5,000 in the deposit. I'm getting 141 drip. The 1% that I collect is not on the 5,000. The 1% that I'm collecting, it's actually 1% of drip, meaning right now I have 1.46 drip, which is slightly more than 1%, because every 24 hours on the dot, I get exactly 1%. Now I just let it pass through, so it's slightly more than 24 hours. That's why you see it more. But that rounds out about $42 per day at current price. Right now, Drip is currently at $36. So at this current price right now, I'm collecting almost for $50 a day. But the magic of this platform is the recompounding, right? Remember our example, right? Where we're going to recompound that on a semi-annual as opposed to annually, and the difference you get was slightly $0.5. Or imagine you were doing that every single day on 1%, right? So this is the magic of this platform right here. It allows you to recompound it every day. And if you've been doing that for a full year, the amount of return you can get right now, just in front of you, I'm going to do the compounding. But every day I do this 1% per day. I put it back on a deposit and then increase the number of drips that I have. And that's exactly what I was trying to show you on the graph. So if you just right here, you're going to see that the compounding says successful. Right then and there, the $50 will disappear. And then it goes right here. And you see my number of drips get increased, right? Now, when I plot this, right? When I plot this model right here, you can see on day one, it's got about $50. Okay, $50 a day, just like we had today. And then by the time you reach 200 days, it goes crazy, right? It goes crazy. Now you're making 600, 700, and all at the end of 265 days, you could be making over $1,000 per day. If you keep compounding all the time, this is the potential of this. So something like this can help you retire easy. Why? Because if you're making $1,000 a day on passive income, just by sleeping every 24 hours, you have about $1,000 drop into your account. This is the life right here. You no longer need a job. You no longer require a job. Why? Because you have your investments that you don't necessarily have to sell the principal. You just sell the rewards, the interest rates, the dividends that comes from such investments, and then you can live off that, right? Imagine you're living off $4,000 a month on your living expenses. Just having to wait 2 days at $2,000 a day can pay off for all your expenses, and then the rest you just keep compounding and it increase your interest. When it comes to drip, this is not infinite, but man, by the time you reach the maximum amount, you will be collecting millions if you actually do it right? This is the potential, and it all depends on the price of drip. Right now, drip is at $30. The risk is you could have it at $5, you could have it at $1, but hey, you could also have it at $100 and $150. 3 months ago, drip price was way above $100. So the price can go up and down, fluctuating. But at the moment right now, I think it's a great time to come in. I'm loading up on it. But what I'm definitely doing is compounding every day, because it's the numbers of drips that really matters. Once you have that machines pumping out drips for you, it becomes a different story. And that's why I'm very excited about this project. And if it does work, I've been vetting this project for 9 months, investing in it for 4 months, and I'm very happy with what I'm seeing right now. A lot of similar projects are failing because of problems they happen on the protocol. Either like there's exploits, people they're failing because there's bugs in the system and people find a way to hack it. But this one has survived the test of time for over a year. And when you have 10x on a crypto like that, it really attracts more hackers. And so far, the hackers haven't been able to break it. So that's the risk. The risk is that deposit, you're never going to get it back. It's locked in unless you can collect that amount of money on the deposit. If the protocol breaks at one day, well, you're going to lose all that money for sure. But that hasn't happened yet, and the signs are great. It doesn't seem that it's going to happen, and that's the risk you're taking. So only invest what you're willing to lose. But if you are compounding every day, the payoff could be absolutely great in a year from now, because it follows the exponential curve, and it's really towards the end that you see the magic of compounding. But it all comes down to the frequency of compounding, not just the amount that you put in. With that said, that's all I wanted to leave you for today. We'll talk on the next video.
Hey, yeah, it's all about wealth engineering. Might be something that you're not used to. It's okay, cause I'm here to introduce you to concepts. Time to grow and make big moves. All about crypto, come see. Stocks and business, yes indeed. Got the info.